Last week, the FOMC rally was sold. This week, I'll talk about the last line for bulls and what needs to reclaim to see all-time highs. This week started with some early weakness, especially on the Monday open. And this is what we talked about in the plan from last week, that due to the asymmetric structure, this kind of grindy trend higher last week, that we were likely to see some retracement of that and some weakness early into the week. That's exactly what we got on this Monday sell-off. And then we kind of settled into some tight chop ahead of FOMC. This was mostly between 68.36 and 68.66, where all tests above 66 failed to continue and then saw reversion back down into the bottom of the range, and all tests underneath 68.36 ended up trapping and reversing and seeing that move back to the top of the range. Then FOMC finally brought some momentum, some volatility, some really nice two-way trading, and after that we kind of got this range expansion to the upside and downside, kind of a expanding, broadening range, and really saw some nice two-way trading into the end of the week. So we had the initial FOMC reaction higher that expands the weekly range to the upside. Then it puts in a failed spike above the prior week high here, prior week high 69.05. We swept that and then end up reversing. We get this long liquidation. We retrace the entire FOMC rally, expand the range down to new weekly lows, and yet again trap underneath 68.36, put in a failed breakdown, and then rotate all the way back up to the top of the range. Buyers still unable to sustain above the 69.08 FOMC high, and then we repeat the same exact pattern again. Long liquidation on Friday, rotates straight back through the middle of the range, expands the range to the downside again, traps the weekly low at 68.17, puts in a failed breakdown for a small relief rally into the Friday close. So overall, really nice trading last week, pretty tight edges of the range before FOMC, but then really nice two-way rotations after FOMC with some pretty clear kind of top of the range around that 69.08, bottom of the range around 68.36 and 68.17. Some of the best longs were around 68.36, especially any of the traps below that reclaimed for failed breakdowns here, and again after the FOMC liquidation, and those all ended up seeing really nice continuation back up towards the top of the range. We also saw one last failed breakdown at 68.17 on Friday that put in a decent relief rally after the big liquidation into the weekly close, a good 30-40 points off of that into Friday close. The best shorts last week were the look above and fail of the prior week high here after FOMC, and then also the reoffer of 69.08 on Friday, or the failure of the overnight low here at 68.89, which is where the sell-off really accelerated. Looking ahead to next week, despite the ugly sell-off on Friday, we still closed at the bottom of weekly balance, and it's important to remember that neither side was able to get continuation outside of the range last week. So sellers were unable to see continuation down underneath 68.36 and 68.17, while buyers were unable to sustain above 69.08 for continuation to all-time highs. So we want to stay neutral as long as we're inside the balance. We want to wait for one side of the balance to break with continuation until forming a directional thesis. So until one side breaks with continuation, continue to fade the edges and don't overtrade in the middle of this area. So basically the range, which could continue to expand as we're seeing this kind of broadening formation, but 68.36 and kind of 68.00 are the bottom of the range, and then 69.08 and the prior week high 69.29 are the top of the range. The key pivots for next week will be 69.08, the FOMC high, and the rejection point which started the sell-off on Friday. 68.89, which was the failure point that led to the acceleration of the sell-off, which will be a key back test for sellers to defend on any pushes higher early in the week. And then 68.36, that trappy pivot where all dips below trapped and rotated higher last week. And then 68.05, the prior week low. And that's going to be 68.05 is really the last line for bulls. If you see the failure of the prior week low and the Friday low at 68.05, that's when you see a potential base breakdown, which leads to continuation lower. So the thesis for upside next week would be that buyers defend the prior week low if tested, push higher to backtest 68.89 and then eventually reclaim 68.89, which would allow for continuation up into 69.08 and likely all-time highs. So it could take many different paths, but generally something like this where the prior week low defends. The main thing to watch next week, if we get a backtest of 68.89, this will be the key spot to watch, which will kind of define the rest of the week. If sellers are able to defend here, but can't get continuation back down to the prior week lows and see failure underneath 68.05, and eventually it reclaims, then you get that offsides move where shorts are offsides, you get continuation back up through 69.08 into the prior week high and clear those two for all-time highs. The downside scenario for next week would look something like either an early failure of the prior week low, which would then be the base breakdown and likely see a long liquidation into 67.74, and then potentially backtest that 67.20 to 30 area, which was the backtest of this breakout from the end of November. If 67.74 fails, we would likely see continuation into that 67.20 to 30 spot. Or if we do get a push higher early in the week, then for the downside scenario, you want to see sellers defend the backtest of 68.89 and be able to see continuation off of that and work back down into the prior week low, and then see failure of the prior week low for that next leg down, continuation move on the base breakdown underneath 68.05. So for the top trade setups for next week, on the long side, I would watch for a failed breakdown of the prior week low. If we see a trap below that reclaims for a failed breakdown of the prior week low, that's worth a long attempt for that traversal back up the range into 68.36, 68.66, and potentially 68.89. Reclaims of 68.36 also probably worth a long attempt for that continuation of the relief rally that started on Friday, which would target potentially 68.89. On the short side, especially if we test higher first early in the week, I would look for shorts on a back test of 68.89. That's the key spot for sellers to defend this week, and it should see a rejection on the first touch, especially if we see a move quickly into that area early in the week. You can also look short on the failure of the prior week low at 68.05, and that would get you set up for the base breakdown and long liquidation, which would target 67.74 and 67.20 to 30. In summary, we're still inside a balance range, so take defined trades at the edges, then look for a trend move only if one side breaks with continuation. That's what I'll be watching for on ES this week. If you want to trade with real pros live every day, join us at Trade with Insight.